Okay, so imagine this. You've got this roadmap to like financial freedom, and it's been crafted from the advice of billionaire investors.
That's a pretty powerful image.
It is, right? And that's exactly what we're diving into today with Tony Robbins' book, Money, Master the Game.
It's a pretty phenomenal book.
It is. It's like a guide to building wealth from any starting point. So if you're ready to take control of your finances, this deep dive is for you.
Definitely.
We'll be breaking down Robbins' 7 steps to financial freedom, and we'll be pulling out all those golden nuggets of wisdom along the way.
I think one of the things that's really compelling about Robbins' approach is that he went out and he interviewed all these like financial giants.
Oh, yeah.
People like Warren Buffett and Ray Dalio and Jack Bogle to really make this complex world of finance accessible to everyone.
Yeah, it's like getting a cheat sheet from the masters themselves.
Yeah,
And, he really believes that you don't have to be rich to start building wealth.
absolutely. He challenges this idea that you need a ton of money to get started. Instead, he focuses on the power of small, consistent actions over time.
So even if you're just starting out, you can take those first steps toward building that solid financial foundation.
Exactly. Think of it like building a muscle.
Okay.
You wouldn't expect to bench press 300 pounds on your first day at the gym, right?
No.
You start small, you stay consistent, and over time you see incredible results.
Makes sense.
Same with building wealth.
Okay. I love that analogy. It makes it feel a lot less intimidating.
Yeah.
So let's get into these 7 steps. Step 1, decide to become an investor.
Okay.
That sounds simple enough, but I'm guessing there's more to it than just making a decision.
Right. It's about shifting your mindset, moving from a consumer mindset where you're constantly spending to an investor mindset where you're focused on growing your money.
Yeah, I can see how that would be a big hurdle for a lot of people.
Uh-huh.
We're so used to instant gratification in our society. It's tough to delay that gratification and think long term.
Absolutely. But that's why this first step is so crucial. It's about changing your relationship with money and seeing it as a tool for building your future. And a big part of that is making a commitment to saving a percentage of every paycheck.
So it's about building that habit of setting aside money for investments before you even have a chance to spend it.
Exactly. It's
Yeah.
about paying yourself first,
Okay.
making your future self a priority.
Okay, step 2 is don't work for money, make it work for you.
Okay.
So once you've got that saving part down, how do you make that money work for you?
This is where Robbins really dives into the nuts and bolts of investing.
Okay.
He stresses the importance of understanding how money works, how the market behaves, and crucially, the power of compounding.
Compounding, that's where your returns generate even more returns, right? Like a snowball effect.
Yeah.
But how does that really play out in the real world?
Think of it this way. Let's say you invest $1,000 and earn a 10% return. Now you have $1,100.
Okay.
The next year you earn another 10%, but this time it's on $1,100, not just the original $1,000.
Gotcha.
So your money is growing exponentially.
So the longer you invest, the more powerful this compounding effect becomes.
Exactly. And that's why Robbins is such a big advocate for starting early. Even small amounts invested consistently over time can lead to significant wealth, thanks to the magic of compounding.
So it's not just about how much you invest, it's also about when you start investing.
Right.
Time really is money.
Yeah.
Okay, on to step 3. Make the game winnable.
Okay.
This step is about setting yourself up for success. Robbins argues that one of the biggest mistakes people make is setting unrealistic financial goals.
Yeah.
They aim for these huge returns overnight, and when they don't see those results, they get discouraged and give up.
Right.
So instead of aiming for a home run right out of the gate, it's more about hitting singles and doubles consistently.
Exactly. It's about creating a realistic plan that you can stick with over the long haul. And a big part of making the game winnable is understanding and minimizing the impact of fees on your investments.
Fees, those don't seem like such a big deal when you're just starting out.
But they can have a massive impact over time. Yeah, think of it this way. Let's say you have 2 investments, both earning an average annual return of 7%.
Okay.
But one investment charges a 2% annual fee, and the other charges a 0.25% fee over 30 years. That difference in fees can add up to tens of thousands of dollars.
Wow. I had no idea the impact could be that significant.
It's huge.
So how do you avoid those high fees?
That's where Robbins introduces the concept of low-cost index funds.
Okay.
These funds essentially track a specific market index, like the S&P 500, and because they're passively managed, their fees are typically much lower than actively managed funds.
Okay, so I'm starting to see how all these pieces fit together.
Yeah.
You save consistently, You invest in low-cost funds that take advantage of compounding, and you avoid those sneaky fees that can eat away at your returns.
Precisely. And that's really the essence of step 3.
Okay.
Setting yourself up to win by making smart, informed decisions that maximize your returns over the long term.
So you're not just playing the game, you're strategizing and tilting the odds in your favor.
Exactly.
All right, step 4 is make the most important decision. Asset allocation.
Okay.
Now we're getting into the core of building a solid investment portfolio. Asset allocation is all about deciding how to divide your investments across different asset classes like stocks, bonds, and real estate.
Right.
And why is that so important? Why not just put all your money in what you think will perform the best?
Because different asset classes behave differently in different market conditions.
Makes sense.
Stocks, for example, have the potential for high growth, but also come with higher risk bonds, tend to be more stable, but offer lower potential returns.
Gotcha. So it's about finding the right balance for your risk tolerance and investment goals.
Exactly. And one of the key principles Robbins emphasizes here is diversification.
Okay.
Don't put all your eggs in one basket, as the saying goes.
So I've definitely heard that before, but I'm still not entirely clear on what a diversified portfolio actually looks like.
Well, imagine this. You've got a basket of different fruits.
Okay.
Apples, oranges, bananas, maybe even some exotic fruits you've never tried before.
Oh, okay. I can picture that.
Now, let's say that for some reason the price of apples plummets.
Oh, no.
Maybe there's a bad harvest, or people suddenly decide they don't like apples anymore.
That would be a tragedy, but I see where you're going with this.
Right, if your entire basket was filled with apples, you'd be in trouble. But because you've got a variety of fruits, the loss in apple value is offset by the stability or even potential gains in the other fruits.
So it's like a safety net protecting you from major losses if one particular investment takes a hit.
Precisely. Diversification is all about spreading your risk across different asset classes so that no single event can wipe out your entire portfolio. And one of the approaches Robbins highlights for achieving this diversification is Ray Dalio's all-weather portfolio.
Okay, I've heard that term before, but I'm not really sure what it entails. What's so special about this all-weather portfolio?
It's a portfolio designed to perform well in any economic climate, no matter what the market throws at you.
And how does it do that? What's the secret sauce?
The key is in the mix. Dalio's all-weather portfolio includes a blend of stocks, bonds, commodities, and gold in specific proportions.
Okay, so instead of trying to predict which asset class will perform best, you're essentially hedging your bets by including a little bit of everything?
You get the idea is that no matter what's happening in the economy, inflation, recession, a booming market, at least some portion of your portfolio will be doing well.
So it's designed to weather any storm, hence the name.
Exactly.
Yeah.
It's a way to minimize risk and achieve consistent returns over the long haul.
All right, this all-weather portfolio is definitely intriguing, and I love the fruit basket analogy.
Yeah.
It makes it so much easier to understand.
Visualization is key.
It is.
So where are we on these steps? We're at step 5, right?
Yes, step 5 is protect yourself from loss.
Okay.
It sounds pretty self-explanatory, but I'm sure Robbins has some interesting insights here.
He does. He emphasizes the importance of having emergency funds and appropriate insurance coverage.
Okay.
It's about ensuring you don't lose everything you've worked so hard for.
This sounds crucial. What does Robbins recommend in terms of protection?
He emphasizes the importance of having emergency funds, ideally 3 to 6 months worth of living expenses, set aside in a safe and accessible account.
So if you lose your job or face an unexpected expense, you have a cushion to fall back on.
Exactly. And of course, insurance is another vital part of the protection strategy.
Makes sense.
Having the right insurance coverage can safeguard you against financial ruin in the event of unforeseen circumstances.
That makes perfect sense. So it's not just about growing your money, it's also about protecting what you've earned.
Absolutely. You can be doing everything right with your investments.
Yeah.
But if you don't have adequate protection, one unforeseen event could wipe out a significant portion of your wealth.
I'm getting the sense that building wealth is about much more than just picking stocks and hoping for the best.
Yeah.
It's about taking a holistic approach and covering all your bases.
You're getting it. It's about being strategic, mitigating risk, and making sure you're prepared for whatever life throws your way.
All right, on to step 6. Invest. Like the wealthy. This sounds intriguing. What's the secret sauce here?
It's about learning from the best. Robbins encourages readers to study and emulate the strategies of successful investors. One key insight is the importance of staying calm during market volatility and thinking long-term.
So it's about not panicking when the market takes a dip and remembering that investing is a marathon, not a sprint.
Exactly. The wealthy understand that market fluctuations are normal, and that time is on their side.
Yeah.
They don't get swayed by short-term noise. They stick to their plan.
This ties in nicely with step 7, stay the course and enjoy the journey.
Yes,
Consistency and patience are key, right?
absolutely. Now, one of my favorite quotes from the book is, "It's not about how much you earn, it's about how much you keep and grow."
That's a powerful reminder that it's not just about earning a high income, it's about managing your money wisely and making it work for you.
Exactly. Building wealth takes time and discipline. It's about making consistent contributions, riding out market fluctuations, and letting the power of compounding work its magic.
It sounds like these 7 steps provide a solid framework for anyone looking to achieve financial freedom.
They do, but Robbins doesn't stop there.
Okay.
He also delves into the psychology of wealth, which is where things get even more interesting.
Okay.
He highlights that wealth is 80% psychology and 20% mechanics.
So it's not just about the numbers, it's about your mindset and beliefs about money.
Precisely. Robbins emphasizes the importance of gratitude over fear,
Okay.
focusing on what you have, not what you lack.
That's a powerful shift in perspective. It's
Yeah.
about appreciating your current situation while still striving for more.
Exactly. And another key aspect of the psychology of wealth is the idea of contribution.
Okay.
True wealth, according to Robbins, comes from giving back and making a difference in the world.
So it's not just about accumulating money for yourself, it's about using your wealth to positively impact others.
That's a key takeaway.
Mhm.
Robert believes that true fulfillment comes from using your resources to make the world a better place.
I love that it's about aligning your financial goals with a greater purpose.
Right. And this brings us to some of the actionable takeaways from the book.
Okay.
Things that anyone can start implementing today.
Okay, let's dive into those. What are some key action points that listeners can take away from money? Master the game.
Well, first and foremost, start saving now, even if it's just a small amount.
That's the foundation, right?
Yeah.
Creating that habit of setting aside money for the future.
Absolutely. Then learn about low-cost index funds like Vanguard's.
Okay.
These funds allow you to invest in a diversified basket of stocks or bonds with very low fees, making them ideal for long-term growth.
So it's about making smart investment choices that minimize fees and maximize returns.
Exactly. And speaking of minimizing risk, diversifying your portfolio is crucial.
Don't put all your eggs in one basket.
Precisely. And finally, take advantage of the power of compounding by investing early and consistently.
The earlier you start, the more time your money has to grow exponentially.
Exactly. Time is your greatest ally when it comes to building wealth.
So it's about taking action now, even if it's small steps, and letting those actions compound over time.
That's a great way to put it. And remember, Robbins talks about the speed of implementation.
Okay.
The faster you put these principles into practice, the sooner you'll start seeing results.
This deep dive has given us a lot to think about, but we've only scratched the surface of what Robbins covers in Money.
Yeah.
Master the game.
It's a comprehensive guide backed with insights and strategies, but hopefully this discussion has given you some key takeaways and action points to get started on your own journey to financial freedom.
I think it has, and it's a great reminder that taking control of your finances is within reach, no matter your starting point.
Absolutely. It's about taking that first step and then building momentum over time. Which brings us to a question for you.
Okay.
Robbins talks about the speed of implementation. Which of these steps are you most excited to put into action right away?
That's a great question for our listeners to ponder, and we'll continue this conversation in our next segment where we'll explore some additional insights from Money, Master the Game, and delve deeper into some of the strategies Robbins recommends. You know, as we're diving into these strategies, what really stands out to me is how Robbins takes this potentially overwhelming topic of finance and breaks it down into these manageable pieces.
It's true. He manages to just demystify it, making it feel accessible, even if you're not a Wall Street whiz.
Yeah.
You know,
Right.
he constantly emphasizes that you don't need to be a financial expert to build wealth.
Yeah, it's reassuring, right? Like you don't need to have an MBA to get started.
Exactly. It's about following a proven plan and having the discipline to stick to it, which brings us back to those actionable steps we were discussing.
Yeah, those really resonated with me. Things like automating your savings, exploring low-cost index funds, diversifying your portfolio, and really understanding the power of compounding.
Yeah.
All things anyone can do regardless of their financial background.
Absolutely. And Robbins goes a step further by providing specific resources and tools to help you implement these strategies.
Oh, really?
Yeah, he's not just talking the talk, he's giving you the tools to walk the walk.
Okay, I'm curious, like what kind of tools? Give us some examples.
Well, he's a big proponent of automating your savings and investments.
Okay.
He recommends setting up automatic transfers from your checking account to your investment accounts.
That's brilliant. It takes the guesswork out of it and ensures that you're consistently investing even when life gets hectic.
Exactly. And he also provides a list of recommended low-cost index funds from companies like Vanguard, making it super easy to get started.
So it's not just about the theory. So he's giving you concrete steps to put that theory into action, which is incredibly helpful, especially for those who are new to investing and might feel a bit intimidated by the whole process.
For sure. And, another thing I appreciate about Robbins' approach is that he acknowledges that everyone's financial situation is unique.
Yeah, that makes sense. What works for one person might not work for another.
Right. He provides different strategies for people at different stages of life, from those just starting out to those nearing retirement.
So it's a personalized roadmap tailored to your specific goals and risk tolerance.
Precisely. He even addresses common financial challenges, like managing debt, saving for retirement, and planning for those unexpected expenses that always seem to pop up.
It's almost like having a personal financial advisor guiding you through the process, which can be invaluable, especially if you're not sure where to start.
You're right, and it's not just about the practical steps either.
Okay.
Robbins also delves into the emotional aspects of money, which are often overlooked, but can have a huge impact on your financial success.
I think a lot of people can relate to that money can be a huge source of stress and anxiety.
Absolutely. He talks about those limiting beliefs many people hold about money and how they can actually sabotage their financial success.
Can you give us some examples of those limiting beliefs, the kind of things that might be holding us back without even realizing it?
One common one is that money is evil, or that rich people are greedy. These beliefs can actually prevent people from pursuing wealth and abundance.
Yeah, it's like an internal barrier stopping you before you even begin.
Exactly. And another one is I'll never be rich, or financial success is only for other people. These beliefs can create a sense of hopelessness and prevent you from taking action.
It becomes a self-fulfilling prophecy. If you don't believe it's possible, you're less likely to make choices that lead to wealth.
Precisely.
Yeah.
And Robbins challenges these beliefs head on. He encourages you to identify those limiting beliefs and replace them with empowering ones.
So it's about shifting your mindset from scarcity to abundance, believing that financial success is within your reach.
You got it. He even provides tools and techniques for doing this, like affirmations, visualization, and gratitude practices.
It's amazing how much of a difference our mindset can make, not just in finance, but in all areas of life.
Absolutely. And Robbins recognizes that true financial freedom is about more than just having money in the bank.
Right.
It's about feeling secure, empowered, and fulfilled.
And a big part of that is feeling in control of your finances.
Precisely. It's about understanding your income, your expenses, your investments, and making conscious choices that align with your values and goals. Choices that move you towards the life you want to create.
This brings us back to that core message. You don't need to be rich to start building wealth. It's about those consistent actions, those small steps taken today that will pave the way to a more secure and abundant future.
Exactly. Now, I'm curious, thinking back on everything we've discussed so far, what are some of the key insights that have resonated with you?
Well, for me, it's the importance of mindset. This whole idea of shifting from scarcity to abundance and believing that financial success is possible no matter your starting point.
I think that's a powerful takeaway, and it's something Robbins continually reinforces throughout the book.
It's also made me realize how much I've been focusing on the how much instead of the how.
Yeah.
Like how much money I need to make or invest instead of focusing on the strategies and systems that can help me reach my financial goals.
That's a great point. It's not always about brute force. It's about having a solid plan and implementing those smart strategies that Robbins outlines.
And speaking of strategies, I'm really intrigued by the all-weather portfolio.
Yeah,
It seems like such a smart approach to managing risk and achieving consistent returns.
it is. It's a way to diversify your investments and safeguard your portfolio against market fluctuations, which can be especially beneficial in uncertain economic times.
I think a lot of people are probably feeling that uncertainty right now. So having a strategy like the all-weather portfolio can offer some peace of mind and help you stay the course even when the market is turbulent.
Exactly. And it's a reminder that building wealth is a long game. It's
Yeah.
about playing the long game, not trying to time the market or chase those quick wins.
It's about building a solid foundation brick by brick and letting those smart choices compound over time.
Well said. Now as we continue our deep dive, I want to shift gears a bit and explore one of the key principles Robbins emphasizes, the power of asset allocation.
Okay, this is where we really get into the nitty-gritty of building a diversified portfolio, right?
Exactly. It's about strategically dividing your investments across different asset classes
Yeah.
to maximize returns while managing risk.
So it's not just about picking individual stocks or bonds, it's about creating a balanced portfolio that aligns with your risk tolerance and investment goals.
Precisely. And one of the concepts Robbins introduces here is the idea of the core four asset classes.
Core four, I haven't heard of this. What are those?
It's a simple framework for diversifying your investments across four key asset classes: stocks, bonds, real estate, and commodities.
Okay, I'm familiar with stocks and bonds, but real estate and commodities seem a bit more complex. How do those fit into the picture?
Well, real estate is a tangible asset that can provide both income and appreciation.
Hmm.
You can invest directly in properties or through REITs, which are real estate investment trusts.
So it's a way to diversify beyond traditional stocks and bonds and potentially generate passive income through rental properties or dividends from REITs.
Exactly. And then there are commodities, which include things like oil, gold, and agricultural products.
These are the raw materials that drive our economy, right?
You got it. Investing in commodities can be a way to hedge against inflation and diversify your portfolio.
So if the price of oil goes up, for example, your commodity investments might increase in value, offsetting potential losses in other areas of your portfolio.
Precisely. Now, Robbins doesn't advocate putting all your eggs in any one of these asset classes. Instead, he stresses the importance of finding the right mix for your individual circumstances.
So the core four is more of a starting point, a framework for building a diversified portfolio.
Right. And the specific allocation will depend on factors like your age, your risk tolerance, your investment goals, and your time horizon.
So a younger investor with a longer time horizon might allocate a larger percentage of their portfolio to stocks, while someone nearing retirement might favor a more conservative approach with a higher allocation to bonds.
Exactly. It's all about finding that sweet spot that balances risk and reward and sets you up for long-term financial success.
Now, Robbins doesn't just tell you what to invest in. He also provides guidance on how to approach investing.
Right. He emphasizes the importance of having a long-term perspective and not getting caught up in the short-term fluctuations of the market.
Yeah, it's about tuning out the noise and sticking to your plan.
Exactly. He also encourages investors to continuously educate themselves about the markets and to seek out advice from trusted financial professionals.
So it's not a set it and forget it approach. It's about staying engaged and informed.
You got it. And I think that's one of the most valuable takeaways from Robbins' book. It empowers you to take control of your financial future.
Yeah, it's about becoming an active participant in your own financial well-being rather than just hoping for the best.
And that's a powerful message now as we move forward in our deep dive. I want to explore some of the specific investment strategies that Robbins recommends. But first, let's take a quick break and hear a word from our sponsor.
It's fascinating how Robbins, weaves together these practical strategies with like a deep understanding of human psychology.
Yeah.
It's not just about like the mechanics of investing, it's about mastering your mindset as well.
That's one of the things that sets this book apart.
Yeah.
He doesn't just give you a financial plan. He helps you understand the mental and emotional barriers that might be holding you back from achieving your goals.
Yeah, so it's about addressing both the internal and external factors that influence our financial well-being.
Precisely. And in this part of our deep dive, I want to explore one of the most intriguing sections of the book where Robbins reveals the secrets of the ultra-wealthy.
Oh, this is where we get a glimpse behind the curtain.
Yeah.
And see how the top 1% play the game.
Exactly. Robbins interviewed some of the most successful investors in the world to uncover their strategies and principles.
Okay, I'm all ears. What did he discover? Spill the secrets.
Well, one of the key takeaways is that the ultra-wealthy don't invest like the average person. They approach investing as a game of strategy, not chance.
So it's not about picking hot stocks or trying to time the market. It's about making calculated decisions based on a deep understanding of the markets.
Right? They focus on things like asset allocation, risk management, and tax optimization. They have a long-term perspective and are not swayed by short-term market fluctuations.
They're playing chess while everyone else is playing checkers.
Exactly. And another key difference is that the ultra-wealthy are not afraid to take calculated risks.
Okay.
They understand that risk and reward are two sides of the same coin.
So they're not necessarily reckless, but they're willing to step outside their comfort zone and make bold moves.
Right. And they do so after careful consideration and due diligence. They're not just gambling. They're investing strategically with a clear understanding of the potential upside and downside.
So it's about calculated risks, not blind leaps of faith.
Precisely. And one of the most interesting insights Robbins shares is that many of the ultra-wealthy don't rely solely on traditional investments like stocks and bonds.
Oh, really? So where do they put their money?
They diversify into alternative investments like private equity, hedge funds,
Huh.
real estate, and even collectibles.
So it's about expanding their investment horizons beyond the public markets. Exactly. They're looking for opportunities that offer higher potential returns, but also come with higher risks.
It sounds like they're playing a different game altogether.
In a way, they are. And Robbins emphasizes that these alternative investments are not for everyone.
Right.
They require a certain level of sophistication, knowledge, and financial resources.
Yeah, they do.
But even if you're not ready to invest in a hedge fund, there are still lessons to be learned from the strategies of the ultra-wealthy.
Like what can we glean from their playbook?
Well, one key takeaway is the importance of diversification. Even the ultra-wealthy don't put all their eggs in one basket.
Right. So spreading your investments across different asset classes is a smart strategy regardless of your net worth.
Absolutely. And another lesson is to focus on value, not just price.
Okay.
The ultra-wealthy look for investments that offer intrinsic value and have the potential to generate long-term returns.
So it's not just about chasing the latest hot stock or fad.
Right.
It's about identifying assets that have a solid foundation and are likely to appreciate over time. Right. They're looking for quality investments that will stand the test of time.
It's a more discerning and strategic approach.
And finally, Robbins highlights the importance of having a strong financial team.
Oh, okay.
So surrounding yourself with experts who can guide you and help you make informed decisions.
So the ultra-wealthy don't try to do it all themselves. They have
Yeah.
financial advisors, tax attorneys, and other professionals who help them navigate the complexities of wealth management.
It's about leveraging the knowledge and expertise of others to make smarter financial choices.
Yeah. So even though the strategies of the ultra-wealthy might seem out of reach for the average person, there are still valuable lessons that we can apply to our own financial lives.
Absolutely. And that's the beauty of money. Master the game. It provides insights and strategies that are relevant to everyone, regardless of their financial starting point.
Yeah, it's about empowering yourself with knowledge, taking control of your finances, and creating a life of abundance and freedom.
And as we wrap up our deep dive into this incredible book, I want to leave our listeners with one final thought. It's a quote from Tony Robbins himself. Success leaves clues.
Ooh, I like that.
Pay attention to those clues. Study the strategies of those who have achieved the level of financial success you desire and apply those principles to your own life.
That's a powerful reminder that we don't have to reinvent the wheel. We can learn from those who have gone before us and use their wisdom to accelerate our own journey to financial freedom.
And remember, it's not about getting rich quick. It's about building a solid foundation, making smart choices, and letting the power of compounding work its magic over time.
This deep dive has been an incredible journey, and I hope our listeners have gained valuable insights and a renewed sense of possibility.
It's been a pleasure exploring these concepts with you and with our listeners.
And if you're ready to take that next step on your journey to financial freedom, we encourage you to pick up a copy of Money, Master the Game, and dive deeper into the strategies and insights Tony Robbins has to offer.
It's a book that can truly transform your relationship with money and empower you to achieve your financial dreams.
Until next time, keep diving deep.